Manual.
Manuel?
Don't talk. Oh, what's up, Edson? How you been, brother? Soldier, welcome. I'm not an options specialist or anything. I trade them, but it's definitely not my focal point. Yeah, happy you found me through Alex. He's a good dude. In fact, he just released that new episode today, so I was gonna plug it real quick right before we get into the actual prep. So it's cool that you mentioned it. That's how I trade them too, Soldier. I trade the exact same way I would trade an equity or a common that's flushing or spiking emotionally on stocks that have liquid option chains. I will trade the options the exact same way I would trade the equities, and just looking for those quick bounces. But it's not, I typically reserve it for the Microsofts, Facebooks, Nvidias, Teslas. Like, it's got to be liquid, and it's usually the higher price stocks where it's, just able to capitalize on the exact same edge, just expressing the trade through the options. Guys, if you can do me a favor, if you're on Twitter or anywhere else you have any sort of social media presence or whatever, either share the link to this or retweet the tweet that I put out or whatever. Let's just try to get as many eyeballs on this as we can. We're going to get started here in just a minute. Three-day weekend. Almost over, but it's been a great weekend. Hope you guys are all enjoying this extra day off. We're going to have to call it the Monday prep for today, I guess. I think we could actually call the Sunday prep Monday prep anyway, because that's what we're prepping for, right? All right, guys. So let's go ahead and get this one started. This is, what is it? The February 21st. So we are, is this the last week of February's trading? Let me check the calendar real quick. Yeah. So next week, nope. There is the 28th is Monday of next week. So we have 1 week of trading and plus 1 day of February left. And why is that important? Well, because if you're looking at higher time frame charts like a monthly chart, the end of this week won't close out that monthly candle yet. But so the name of this episode is going to be Time Frame Agreement and the Importance of Confluence. And we'll get into that. Let me do a quick little bit of housekeeping, guys. As always, make sure you're subscribed to the channel, turn on the notifications so that you can get alerts for when I or Goose do our live streams or when we put out any other content. Goose's midweek watch is not going to be happening this Thursday. He is in the middle of moving, and he's got triplets. So he's got a family of 5 trying to move to a new house, and so that's extremely time consuming and a lot of work and effort that goes into that. So I know that I speak for most of the community, Goose, when I wish you well on that, and I hope you get everything taken care of and it goes smoothly. And if you need anything, obviously reach out to your brother here. But so yeah, midweek watch is not going to happen this Thursday, but I'm sure he's going to get right back into the swing of things as soon as he gets settled in. And that is Thursday mornings at 8:30 in the morning market time. So it's that half hour from 8:30 to 9, and he's always just knocking out some really good ideas that'll get us through Thursday and into Friday, close out the week, and then I come in with Sunday prep and try to help you guys prepare for the beginning of the week. Guys, Cobra Trading, if you guys are looking for a broker that is the only broker I'm going to actually be able to recommend, and I've tried them all. These guys are hands down, when it comes to customer service, there is no one better. They've got great locates if you're a short seller. They have really good pricing on their commissions. And in fact, if you use the link in the description of this video, you will get actually more than 25% off of the commissions, and you get 1 month free of the platform. So if you're looking for a good broker that's trustworthy, go ahead and check Cobra out, guys. Spike Heat, I pump these guys every week. You can't do what I do without these guys, and that is backtesting data, historical data, and I mean years and years and years of it. If you want to track data manually, go ahead. I did it for a long time prior to these guys creating this product, and I would never want to go back to doing it the way I used to do it. But you have to track the data in order to test an edge and to validate or to rule out whether or not an edge exists. And these guys really make that process a lot easier. Scripts to trade, guys. If you guys don't know about these dudes, man, they are hands down my go-to guys for any type of custom indicator I want created. They already have a bunch of indicators that are ready to go. They make them for PineScript, which is TradingView, or ThinkScript, which is Thinkorswim, and I believe they're looking at making scripts, custom scripts for other platforms as well. And I can't recommend these guys enough. Some of the tools are extremely powerful. A lot of them have to do with volume and support and resistance stuff that they've created these really powerful indicators that help us trade. And spend money on your tools, guys. Whether it's a news service or your charting platforms or whatever, you get what you pay for in this business, and that's the truth. Quickly, earnings this coming weeks right here. I don't go into the earnings names for my Sunday prep anymore due to the fact that a lot of stuff can happen from now to the time they report, and we don't know how they're going to react to the report anyway. So I felt like I was wasting a lot of time on these Sunday preps going into the earnings names. So I have a webinar. I'm sure Raul will probably link it in the chat, and it's probably going to be linked in the description as well. You can watch that webinar. It teaches you step by step how I prepare for earnings trades, and obviously there's a million different ways to skin a cat, right? But this is the way I do it. And so my friend Alex, Be The Story, hopefully you guys know this guy. Check out his YouTube channel. He does amazing interviews with traders, and I've actually sat down with him prior to this, but he just released a new one today, and it was a really fun interview, and I was going to plug it real quick and check it out.
You should always have a mindset of anything can happen. Don't ever say it can't go higher. You should be like, this could go a lot higher. And notice the difference of how you would approach that trade if that's how you're thinking about it from the onset.
Welcome back, everybody, to Be the Trader.
So yeah, that's the new episode that just came out this morning. Check it out. You guys should definitely be following him. Give him a like and a subscribe and turn on the notifications over there. I know he's already got a few other... He's always filming. He's always filming and editing. So he's got a few more amazing interviews that are just waiting in the wings to be dropped. So make sure you give my boy Alex a follow, guys. And hopefully you guys like the interview I did. And leave comments on it. And not just on his videos, but guys, leave comments in these videos too, the Sunday Preps. Please, please, please give us feedback, give us criticism. We can take it. I just want to know what you guys would like to see more of, less of, what we're doing well, what we're not doing well, okay? And you guys are the only way we're going to find that out. So let's get into the actual topic. When time frames agree, why is that important? Okay, so let me actually just start by saying this. This week's Sunday Prep is going to be a lot more off the cuff. I'm just kind of freestyling this because honestly, I feel like when I get to just talk about things the way I see them, they typically come out better and feel less scripted. And so I wanted to just put that out there. If this week's episode seems a little different, it's because I'm not writing any of this down or making notes. I literally am I want to talk to you guys about a few things, and we'll get into the ideas. So you guys should know by now, if you have been following my Sunday Preps, my ideas always fall into 4 main categories, right? There's 2 types of long setups I look for and 2 types of short setups. The longs I'm looking for are strong stocks where I'm looking for them to continue higher, or I'm looking for oversold stocks and I'm looking for a bounce play. And it's vice versa, just flip for the shorts, right? I'm looking for weak stocks to continue lower, or I'm looking for overbought stocks to give a reversal. So depending on what the larger time frame is saying, not just on that individual name, but also on the broader market or whatever sector it's in, those things can oftentimes lend themselves much, much better to certain types of setups. So a lot of times that's why we start with the broader market. I like to look at the ES, like the S&P and the NASDAQ and even the Russell, right? And see what is the broader market doing, and does there seem to be an apparent higher probability side to things? Are we really extended on the SPY from the 20-day and have a lot of room to come in? Or have we just recently pulled back to the 20-day? Or are we really sold off? Because depending on that, like if we're really sold off, and like when we get into the broader market analysis, we will talk about this, but if we're really, really sold off, then we may have a lot of oversold reversion setups that are setting up. That doesn't mean I'm not going to have ideas that are strong stocks looking for continuation. But if the SPY has recently just pulled back to the 20-day, then that lends itself a lot better to the possibility of these strong stocks getting those continuation setups. And that same concept can be applied to the short side, guys. So like if we're really extended to the upside, then some of those overbought reversion setups are going to be my focal point. And that is just the fact that the broader market should be able to give us some indication of what the higher probability side of the trade is to be on. Now, what I mean by time frames lining up, you guys should be able to understand this concept, and if not, please start looking at charts and start to see it through this lens. Something can be in an uptrend on one time frame and be in a downtrend in another time frame. We can look at a chart of any stock that's just been strong for the last let's just take the energy or oil stocks right now. Most of them have been in uptrends, right? So you could have a daily chart or a monthly or weekly higher time frame chart, and the stock is in an uptrend. But you can go and look at an intraday time frame, like an hourly chart or a 30-minute chart, and see that it may be in a downtrend on that time frame. And the higher time, I always like to start at the higher time frames and start to zoom in. And what I'm looking for is, when do time frames line up? They won't always all line up, but oftentimes you will see situations where we're in an uptrend on the daily chart, we're in an uptrend on an hourly chart, we're in an uptrend on a 30-minute chart, we're maybe in an uptrend on a 5-minute chart, but maybe the 1-minute chart is pulling back and is in a downtrend at the moment. And what happens is you've got all these time frames lining up. They're all saying we're in an uptrend. And you have one low time frame, like a 1-minute chart, and it's kind of looks like it's a downtrend, but when that downtrend ends and that reverses, that is the flip, the switch that flips, and everything can get that momentum boost. And that is what I mean by time frames lining up. Now, you know, the exact opposite of that looks like chaos, right? You could have the 1 minute in an uptrend, the 5 minute in a downtrend, the 30 minute in an uptrend, the hour, and you know, you have all these time frames crisscrossing. That is not giving you that kind of confluence. So just because a trade looks really good on one time frame, look under the hood. Take a look and see what's happening on all the time frames, and see if you can spot when things line up and you get that shift. And the other part of that is, you know, time frames are one way of seeing confluence. When all the time frames agree on something, that is confluence. It's a form of confluence. But there's other types of confluence, right? So maybe I'm looking at the 20 day on a daily chart. We just pulled back to the 20 day. Okay, that's one piece of evidence. Like, let's say I'm a detective and I'm collecting evidence. You want to build a strong case for why this trade should be taken. So the 20 day got one piece of evidence, but is there other things there? Is it also a psychological level? Maybe it's a pullback to the 20 day and it's also the $100 price level. That's a key level, a psychological level people look for. That may offer extra support. Now we have two pieces of evidence. Maybe there's also a quarterly pivot. Now we have three pieces of evidence. Oh, what's that? You looked at a weekly chart and it also just happens to be a very strong level on the daily or on the weekly chart. There's another piece of evidence. And when the evidence starts piling up and piling up, you get more and more sets of eyes on the same trade. And when more and more people see the same thing but are looking at it from different angles, you oftentimes have a better chance of that trade getting that momentum that you're looking for. And that is what I mean by confluence. And you know, it does, you really can start to think outside the box of what things could actually be considered confluence. So whether a sector is strong and it just happens to be in that sector as well, and you're looking for a long setup, well, there's another piece of confluence. So start to stack those things. Get as many boxes checked in your favor as possible, so that you stack the odds in your favor. And remember, like, even when everything lines up, there is always still the chance that things will not work and still fail, right? Nothing's 100%. So that's why it's so important to get as many things going for you as you can, so that you know that at least you know, we really had the probabilities there to justify putting the capital at risk. So that was really all I wanted to say about that. And so let's get into the disclaimer and then we'll hit up the ideas, guys. As always, I nor TrueTrader or any of his representatives are registered as security broker dealers. I'm not a licensed financial advisor. Anything you hear me talk about is for entertainment purposes only. It is not a solicitation to buy or sell any stocks. All right, guys? Oh, so I don't have the charts picked. Hold on one second. Let's see here. I apologize. Where is my charts? Is this them? There we go. Sorry about that. All right, so as always, guys, we're going to start at the broader market. Always start with the ES. It's the way I look at the S&P. Now, here's a funny thing, guys. I get a lot of people asking me why I use the ES instead of the SPY, right? You don't have to use the ES. You can totally use the SPY. But guess what? On 3-day weekends like today, where it's a U.S. holiday, President's Day, it's not a holiday for the rest of the world. The rest of the world does not care about our presidents. So the ES, the futures are trading, and you'll notice, you can see, you may see some movement here, especially if we were to look intraday, right? Yeah. So you'll see movement in these charts while we're talking about them, and it's also important to understand that meanwhile, while the NQ and the ES are trading, the QQQ and the SPY are not. They're just sitting there, and so this is going to give us a little bit more of an accurate view of what is the present moment compared to if we were just using the SPY and the QQQ. So guys, we are really flirting with some important levels. You know, I've been talking about this week after week after week, and that is just, identifying the path of least resistance and not fighting the trend, okay? And this, I mean, we can look at the monthly. It's not going to matter too much until till March, but you know, even if this candle closes anywhere around here, you're going to have a pretty ugly February candle on the monthly chart. As far as what I care about on the monthly chart, March's candle, if I don't know if it's a pretty big if March's candle can come up and break February's highs and then but not take out the all-time highs, we may be working on a very, very high time frame, the monthly chart, putting in a lower high. Okay, so it needs to kind of push, it needs to make that attempt higher and fail before we can really have a lower high on the monthly time frame. But the weekly chart is a pretty high time frame too, and we clearly have a lower high here that is starting to form. It is not confirmed yet, right? We still need to lose these lows from what is the low here? 4212.75. That is the low that once we lose that, we confirm on the weekly time frame that we have put in a lower high by subsequently going and making a lower low. And it, you know, this chart can get pretty ugly if we lose that level. It's not like it for sure has to be the end of the bull market, but it definitely is starting to look pretty bad. And it doesn't even really matter, because what matters is we're just being objective. We're just looking at the chart and saying, look, this thing's pushing up into resistance and it's stuffing and rolling back over. Now, for the near term, let's look into the daily chart real quick. And I want to say something about the near term is, you know, we've come down quite a bit without any sort of real substantial bounce. Near term, I really do kind of expect these levels to put up a pretty good fight and maybe give us a rally early in the week. And what I would look for is that rally to kind of either, you know, we always have the plan for all the scenarios. So we're either going to try to rally and we're going to stuff really hard, maybe the 200 day slash area. I mean, you know, we just had the 20-day cross under the 200-day. That's not bullish at all. Price being under the 200-day, not bullish at all. Price constantly making lower highs and lower lows, not bullish at all. So if we rally, that would be the first level I look to see if the bears protect it and stuff there. If not, you know, it doesn't really matter, because until we get over that 45.86 level, and in fact, we can go ahead and just draw it up here so you guys can see it. It's just these highs, right? So we need over there. We get over that level, and the bulls might be gaining a little bit of momentum, but it doesn't put them near out of the woods. Like, they really would need to, you know, even if they clear 45.86, they need to get back to all-time highs before I feel like this bull market has any chance of really getting a resumption. Until then, you know, all pops in my eyes are where I want to start leaning. You know, I'm not putting on any new long swings unless they're in strong sectors that are lending themselves to an actual long thesis. There's no way I'm starting any new long swings in anything until this market starts to show any sort of signs of a reversal. And in order to reverse, this is very simple. The market needs to stop making lower highs and lower lows, and needs to start making higher lows and higher highs. So until that changes, there's no reason for me to put capital at risk for long swing positions. Now, that doesn't mean I won't take longs on emotional flushes or on strong stocks that are holding levels. And, you know, if the market does get that rally, hopefully all the stocks that have been strong are the ones where the money flows into, right? It should make sense, right? If you're going to put capital to work on the long side, hopefully it's into stocks that are showing you a reason to get long those names. So as far as support goes, you got 42.65, and then below that, these lows here, what do we call them? 42.12, 42.12.75. And, you know, below that, there's really nothing until we get down to the monthly 20. Now, and this is, remember, this is the ES. The NQ is already down there. And the NQ actually does still look a lot weaker. So do the growth names. Now, remember, the indexes, especially the weighted ones like the S&P and NASDAQ, don't always really reflect the true picture of all the individual stocks trading in those baskets. Most people can tell you, even though we're pretty close to all-time high still on the S&P and the NASDAQ, that's not the case for most of the growth stocks out there. Most of the growth stocks have taken 50, 60, 70% haircuts. So, you know, but don't think, and this is something that you guys should really, really take to heart. Don't think because something took a 60% haircut that it can't get cut in half again. Okay? If this bear market does unfold, if we do start to roll over and lose even more levels, and we keep going lower and lower, and every pop is a lower high, and we keep going lower, you know, you can find exact historical situations that are proxies to this, where strong companies, you know, like go look at what happened to Apple in 0809, right? Like strong companies, really strong companies got decimated. And so there's a lot of companies out there now, even though they took 50% haircuts, are still trading at crazy valuations. And you might think they're on sale right now, but it really sucks to buy something you think's on sale and then go back to the store the next day and it's 50% cheaper. So don't think it can't go lower. Yeah, and so I'm going to keep the support and resistance levels to a few, right? The key ones. But I want to show you guys something. I forgot. I do want to do this for you guys. This is something I do every single morning, not just, you know, for my Sunday preps, okay? Every single morning I wake up, one of the first things I do is I start looking at a time frame like an hourly or a 2-hour chart, and I start asking myself, okay, where do I just want to know, where do I want to get alerts when the market trades through a certain area, okay? And so I usually lay out 2 to 3, sometimes 4 of the near-term key levels of support and resistance, and I just mark them with alerts, okay? So, you know, this level here, 40, let's just call it 43.50, I'll just throw an alert there. And what I do is I make it so the alert is good through the end of the week, okay? So it's good for 1 week, and most of these will get hit throughout the week, right? And as they get hit, I wake up the next morning and I do it all over again. And so, you know, at the end of the week, whatever alerts get hit, some of them don't, but this is, and what I do is I just title it R for resistance or S for support, guys. So you can see down here at this 42.65 area, there's a pretty key area down here. I'm gonna set and I put it a little bit ahead, okay? I don't want to get alerted after it loses the level. I want to get alerted as it's coming into the level, and the reason is, if it's selling off fast down into that area, I want to assume that if it's emotional, it's going to bounce the first time it plays there. And then I want to know that other stocks that I'm looking to get long are possibly coming into an area where the market may bounce, and that's going to give me wind in my back. So here's one level I would mark as support. Make it good for a week, and I just do this it doesn't take very long, guys, okay? Now, one thing I will say is this last level that is a super important level, right below that 42.12, below 42.12, I do want to set another alert that tells me, no, that level was breached, right? And this is a lot of times I just name it something funny like rut row, and that does not need to expire at the end of the week necessarily. I might give that one, you know, to 2 weeks later, right? But I definitely want that level to get my attention for a different reason, right? Not to tell me, oh, here's a good spot to bounce some stocks. No, this is like the oh shit level, right? And I do the same for the upside, right? So here's a level I want to know about for resistance. Let's call it 44.65, okay? So I'll put an R, make it good for a week. And, you know, we obviously have, actually, you know what? I'm going to bring this one down below the 20-day. We'll call it 44.35, okay? And that's going to let me know, okay, now we're really pushing right up into the 20-day, the 200. There's some levels there that I definitely want to know about, right? But when we get up over that 45.86 level, remember, that's a long trigger. So I would definitely set an alert before it, calling it resistance, and make it good for a week. And just like I did on the downside, I'm going to set another alert above it that says, you know, long trigger. And what I want to know about that is, like, remember, I still think even if bulls get above that level, they're not out of the woods. I'm going to keep saying that, right? That in order for them to really get out of the woods, they got to get back to all-time highs. So this is, in fact, for me, not necessarily that bullish just because it says long trigger, right? Long trigger just means they may have just put another piece in the puzzle that's going to lend itself to giving us that next leg down, because failed long triggers always result in the best short triggers. Remember that, guys. So this one I'm going to make good for 2 weeks. And I do the exact same thing on the NQ, okay? And I do this every single morning. So I always have my levels, very, very obvious alerts set for them. And I don't have to stare at the S&P or the NASDAQ throughout the day. I'll just get my alerts, and it just keeps the efficiency there for me when I'm trading. Now, remember what I said about the NASDAQ. We have already got down to the monthly 20. You'll see right here. So, all these bear markets where we really roll over, the monthly chart ends up putting in these lower highs, and then that's what, really, really rolls us over. So what does a lower high on a monthly chart look like on a weekly chart? You want me to give this one away? Because I'm going to just throw it out there. It's a weekly time frame triggering that long trigger. Remember what I just said? Those long triggers, when they fail, end up being the best short triggers. Well, a failed long trigger on a weekly chart is going to look like a lower high on a monthly time frame. You might have to rewind that and listen to it a few times for that to click and make sense. But when you realize how these time frames do this dance, that's when you start to have these aha moments. So yeah, you can look at all these previous, this is the 2000, the dot-com bubble busting, and you got a very, very definitive lower high on the monthly chart. And then when we broke and went lower, thing got cut in half. I think actually more than half. And then again, in the great financial crisis, come down, lost the monthly 20, push up, make a lower high, roll over, cut in half. So that's kind of where we're at here on the monthly chart on the NASDAQ. Is here we are, we're into the monthly 20. What's left? Well, I don't know if this is where the pullback ends, but remember, it's not what happens when we pull back, it's what happens next. Do they push up and make a lower high? And if so, do we then roll over? Because if so, do not be that stubborn guy. I was making fun on joking with a friend of mine who is a pretty macro guy, and we were talking about how far the market can pull back and this and that. And I really said it doesn't even matter, because as long as it makes lower highs and lower lows, I'm just going to go with the trend. Anybody trying to pick the bottom of a bear market is just as silly as all those bears that were trying to pick tops for the last decade, right? Why pick a top in a bull market when you don't have to? There's clear signs of when a market's rolling over, and there's clear signs of when a market's bottoming. I'm not here to pick tops and bottoms. I'm here to identify the trend and go with it. Remember, path of least resistance, guys. So weekly chart, again, we are flirting right now. There's all this headline risk going on with Russia and Ukraine. We are really, really flirting with this low here at 13,706. Did it break it yet? No. So we came 10 points on the NQ away from triggering that already. Who knows if it's going to happen while we're sleeping tonight, when you wake up in the morning. We're right there. We're just hanging on the edge of this cliff. Now, it doesn't matter too much if it triggers, because I don't expect it to just sell off violently. It could, but we've already had a pretty decent sell-off. We're into the monthly 20. Even if we lose that level, I think there's plenty of support just below where we're going to get a big rally and a bounce. Now, again, just like I said with the ES, I don't care about what it does, but I make plans for each scenario, right? So if we get that rally up into the 20 days, the first level of resistance I'm really going to be interested in. By the time that happens, the 20-day may have come down to this level here, which I've got marked as a pretty significant level, which is, let's just call it 14,385. And again, I do the exact same thing on the NQ as I do on the ES, and that is marking these levels that just are the obvious significant levels of resistance and support. So you guys can see right here is going to be a level for me. Mark it as resistance, make it good for the end till the end of the week, and we just keep it moving, right? It's really, really simple, guys. And if you guys think that what successful traders do should be complicated or complex or rocket science, you're wrong. I honestly think that the more you keep things really, really simple, the better the chances are you're going to get this. All right. Now, obviously, I want to know about the 20-day, so I'm going to put one right around here. But I still see another level right above it that I think would be silly not to mark. And that is right up in here. And remember, this is super simple. Wake up, do it in the morning. Takes 10 minutes, not even that, like while you're prepping for your morning. Now, as far as support, there's not a lot of levels to mark, right? In fact, I'm probably not going to mark much, if anything. I'm just going to mark below our trigger level. And let me make sure what the exact level was. It was 13,706. So let's put it 13,705. And we'll call it the rut row level. And we'll make it good for 2 weeks, okay? Even though I feel like there's no point in making it good for 2 weeks, right? It's probably going to trigger tomorrow or while I'm sleeping, right? But we'll just do that. Okay, so I've got the rut row level marked. I'm ready to go. I've got, plenty of levels of resistance. Why? Because I think we're in a short the rip market, not a buy the dip. When we're in that bull market and we're making higher lows and higher highs, all the dips are giant opportunities. But when we start to roll over and we see the broader market form these tops, I have to go into that mindset of short the rip instead, and the path of least resistance being down until the market tells me otherwise. Okay. So let's real quickly, I know that took way longer than usual to do the broader market. Let's just real quick look at Bitcoin, because Bitcoin's been interesting. My best friend is very interested in me letting him know like my levels on Bitcoin, because he is involved in it. And I already told him, I said, look, even though when they had this breakout here, it's not for sure that we've bottomed. What you need to see once you think we've turned is for a retest of that level where it broke from. So that's that 39,000 level. We have retested it and we've lost it. So, it doesn't matter if it holds that level to a T at all. In fact, it still can bounce as long as we don't come back under this low here, which is, 32,933. Okay, so right below 33,000. If we come below that level, then the downtrend is still intact and we still can go lower. But if we get back above this yellow circle that I've got drawn here, so basically what this yellow circle represents is the possible long trigger, right? Let's say we bottom right here where we're currently trading. Let's say this bottom's here, and then we go and break that level. Then you have a pullback, a push up, which makes an intermediate high. This pullback makes a higher low, and then the break that level is your long trigger. And if that happens, then I believe we may be coming out of this downtrend, okay? And then we may be curling back up and can go higher. But if not, if we come back and lose this level, downtrend still intact, can still go lower, okay? And remember, I don't trade the cryptos, but I definitely trade the equities that are related to them. And Russell 2000, it's no different than what we've been talking about. Push up, stuff this channel that it was in for a long time, and now we're heading back down. All the broader markets are telling me to short the pops, and all pushes should be looked at as pretty much gonna be looking for lower highs, whatever time frame you're looking at, right? The monthly, as soon as March's candle starts, I'll be looking for that. The weekly, yes. Daily, yes. So all these big pops, I'm looking to put in lower highs. All right, so that takes care of the broader market. Let's jump right into the sector analysis. This is your barchart.com stock sector matrix. A lot of red, obviously, and we'll get into the ETFs in just a second. Remember, I'm freestyling this. I don't have anything written down for it, but I do point out real fast, consumer staples is right now the only one that had a good week. And when we get into the ETFs, you're going to see just that. So we're just going to go sector by sector. Whoops. So retail still looks like trash. Could be a bear flag here. You can see I have some levels set as alerts, okay? And look, this says daily long trigger. If this triggers right here, it says daily long trigger to get back to the weekly 20. So let's look at the weekly chart. You'll see where the weekly 20 is. It's currently at 89.34. So over that level, and that could push us back up into that. Now, that's still not bullish, right? That's still a push up into all this overhead supply, into a descending weekly 20 SMA that just crossed under the weekly 50. Like, it doesn't really get the bulls out of the woods, but that trigger is something to pay attention to, especially if you are shorting retail names, right? The Macy's, the Nordstroms, the Dick's Sporting Goods. Remember, Dick's has from last week's prep, right? It lost this trend line. I'm looking to short a pop. So in fact, I hope retail triggers this and pushes it into the weekly 20, because it's probably going to lend itself to getting Dick's to the spot where I would like to short it. So I'm going to try not to spend too much time on these. Let's go into financials. Still in this channel. Listen, is this a lower high here? We won't know until what? Until we come and lose these lows here. That's why I have a trigger there. Not a trigger. That's why I have an alert set there, because if we come and lose that, we may finally be rolling over on the financial sector, which has been one of the few that has stayed strong, right? This one is definitely still in an uptrend. Looks a lot healthier than a lot of the other sectors, but it definitely has a looming trigger that could get us to change that outlook. You will notice there's a lot of looming long triggers in a lot of the beaten up ones. So I'll point all those out too, okay? So I'll skip some of the ones I don't care too much about. Like, I don't trade the real estate stuff. Healthcare, same looming long trigger, okay? Let me look at a weekly for you guys. Look, over this level right here, it's your long trigger, okay? Yeah, so up over that, and this thing can start getting some legs, right? And it actually doesn't look quite that bad. Not near as bad as some of the other sectors, okay? But just as easily as it could go up there and break that long trigger, it can come down here and trigger this for a continuation rollover lower, okay? That's why I have both levels marked. Building materials, I don't mess with. Let's see. Yeah, don't trade the industrials or the utilities much. Consumer staples, guys, this is the one, remember when we were looking at bar chart, had the good week, right? It is still by far the best looking sector in terms of all the other names that, you know, are just really thrashed and destroyed, barring oil and energy. We'll get into oil and energy last, but obviously oil and energy have just been on a tear. But this one still looks very, very healthy, right? Uptrend intact, flagging up here near the highs, definitely has a long trigger looming, lots of support below, okay? And most of my long ideas this week are from this sector, and that's something you guys should do as well, right? You guys should identify the strong sectors and make sure your long ideas have that sector strength. I mean, it just makes so much sense, right? Consumer discretionary, looming long trigger, but also looming short continuation short trigger under here. Now that's going to put it right into the monthly 20, but I still want to mark it. Not going to title anything because I just want to keep this moving, but up here is your long trigger over 190-ish, call it. So you got two triggers there. They're much more obvious to see them when you look at the weekly chart. Okay, so possibly putting in the low and then a higher low, and then if we get over that, can push. Still not very bullish, right? Not a very bullish looking chart, even if it triggers that long, okay? Communications. I think communications is getting oversold. That's why I have this alert set down here. I want to see this capitulate. I want to see it flush out. I think communications is getting close to a near-term bottom and it's going to give a really good bounce. There's a lot of other names in that sector that are oversold as well, and I think those make good opportunities for when this does bounce, okay? Biotechs, we got what we needed last week. If you guys remember, last week's candle broke the low of the previous week, so we may be putting in the higher low on the weekly chart. So now if we get back over 2 weeks ago's highs, that's your long trigger. And remember, we already thought this is getting pretty oversold, might be ready for a really decent bounce in this sector, and now we're starting to see things develop that may get us that leg up. Now remember, if it doesn't trigger and we come down here and roll over, it doesn't matter. No harm, no foul, no capital at risk, okay? That's the best thing about this, is that it's just if this, then that. And, if we don't go trigger, we never have a reason to get long. We got our hands off, no hand in the cookie jar getting slapped. Tech, looming long trigger, looming short trigger continuation, right? Exactly like the other ones. Now this one, if it gets above this, let's see, what is it? 163.98 is the trigger, okay? So over 163.98 in the tech sector here, that should get a push towards all-time highs. Now, it doesn't have to happen in a day or a week, but once that triggers, if it doesn't get to all-time highs and then we come lose these lows here, that's the rut row level, okay? Remember, that's what we mean by failed long triggers create the best short triggers. So yeah, you have triggers on both sides. Like I said, there's a lot of looming long triggers, but if they don't end up playing out the way they're supposed to, maybe setting us up for some big moves down. Energy and oil, again, like I said, energy seems to still be getting a bit ahead of itself. I'm hoping that we get this big push up into the 79 area, and then there's going to be some good shorts in the energy sector, I think. And it's not like I'm talking about swing short or anything. I think there's going to be some really good just day trade opportunities. And oil, again, oil is just every dip is bought. Trend is your friend. This thing is nice and controlled, but again, when you're looking at something that's trending this well on a weekly chart, make sure that when you're identifying levels of support you want to buy, you should be using those higher time frames. So don't just stare at a daily chart and think like, oh, I'll just buy this, right here off of 106.75, right? If you look at a weekly chart and ask yourself, where could this get to? Well, the weekly 20 is not till 103.87. And then you have, the 50-day and those previous lows around here, all right around 95. So don't be in a rush to run in there and buy this thing if it could have a bigger pullback and give you a much better entry. So that's your sector analysis, and we're going to get into the ideas. There's not a lot of them this week, guys. I wanted to keep it more focused on the thought process behind how I prepare and not so much just idea centric. So let's see, long ideas, strong stocks, looking for continuation. Remember, guys, I said most of these are coming straight out of the consumer staples sector. And if you guys don't know how to find that, look, go to your bar chart, just click consumer staples, and there they are. There's all the names that comprise this sector, and I like to sort by volume because I'm not trying to trade anything that's illiquid. And right off the bat, KO, Coca-Cola, is the first name on my list this week, guys. So let's take a look at the chart. And again, bullish chart, everything looks good. Why wouldn't it? It's in the consumer staples sector, and it's just been performing really well. Again, I like it because of the liquidity and because it's strong. And if the market gets that bounce, gets a rally, this one might get some wind to its back. The level I have that I want is 61. The 20 days currently at 60.93, and if you start to peer into some of these intraday time frames, you can see it's a very simple and easy to see area right here where you can just kind of draw lines. Whoops, wrong button. Let me get back to the hourly chart. There we go. Meant to hit shift. So you can see all these tops, right, where it just kept hitting its head and reversing down. So yeah, I'm just looking for 61s. You can just right up in there. There's just a lot of price history in the 20-day. So that's what I'm looking for on Coca-Cola, 61. Any kind of Monday morning panic flush down into those levels, I would be a buyer. The next name, straight out of that sector as well, KHC, Kraft Heinz. Now, this one has had a really big move up in the last 4 days, right? From 34 up to 40 almost, on a name that's got a 94-cent ATR. So I'm not in a hurry to buy this. In fact, I'm looking for about an ATR flush into that mid 37s, 37.50 area. And if it doesn't work, I don't mind cutting it and re-looking 36.40, which puts us in this pocket down here. The thing about this name is knowing the range is a lot smaller. I'll probably use more size and a tighter stop because you're not going to be expecting a huge move out of it. But just like you're not expecting a huge move, it also means you really shouldn't be giving it that much room to go against you either. So this will be one of those ones where I'm going to probably have a bit more size on the name and a tighter stop just due to the range and the liquidity. It trades 15 million a day, so we're good to go. Well, actually, it's not averaging 15 million a day. Average is like 9, but recently, obviously, they just had earnings, so they put in 3 back-to-back 14 to 15 million share days. There'll be liquidity on Monday, I'm pretty sure. And one of the things I want to point about this one and the next one I go over is that if you look at the higher time frames, this chart looks very, very swingable. I like the look of this as a big bottom. Again, the only reason I would even consider it is because it's in a sector that has good strength. But I feel like, you get this low here, a push up into the weekly 250. The pullback made a higher low and then we broke it. Okay, so I would be looking, if I was thinking swing, is a flush on Monday morning where I buy it and look to lock in profits on a pop, possibly keeping a piece on. So, and the thesis would just be right here. Let me zoom in so I can draw this a little bit better. Well, it's not the best drawing, but whatever. Oh, where did that go? Jeez. All right, and then, so it already triggered, right? This level was a very important level. We got above it. We even closed above it on the weekly. So I'm looking to buy this thing down into 36.50 with risk under this low here, under 32. What's the low? I'll be exact, 32.78. So I would probably give it 32.39, make sure that it loses the half, 32.50, and forces me out. So I would size appropriately, right? Getting in about 4 points of risk on a swing, but the first target is up here at 45, okay? So if you're getting in at 36.50, you've got 8 points of target, and you're risking about 4. You're getting 2 to 1. You could possibly even keep it tighter. I'll show you guys how to use this here. Here's your target up here, these highs. And so right here's where I'm stopping. Let's see, well, I gotta get the entry also, 36. Let's call it 36.50 we're looking for. And so under these lows here, and shows you getting just a little bit better than 2 to 1. But if you tighten it up and come under these lows here, you're getting closer to 4 to 1, but you're also not really wrong yet in your thesis if you stop out there. It could easily come down here, stop you out, and never break these lows and then end up working. So that is the trade-off, right, of tightening up that stop a little bit to be able to get a better risk reward, but also there is the chance you take yourself out of the trade and it wasn't really wrong. Okay, but I do like this chart, and wait till you see the next one. I feel like I like it even more. So 30, let me reiterate, the day trade idea on it was 37.50, which is your monthly and annual pivot, and the ATR pullback flush. If that doesn't work, 36.40 is the next level, and that is the area where I would like to think about starting a swing on the name. Oh, there's where that hidden circle went. So that was the day trade idea. And then 36.40, if I get a good strong close, locked in profit, I would leave some on for a swing up to 45 with a stop under 32.50. Just say underneath 32.50 is where I would cut that. MO is the last idea from this sector, and this is a beautiful weekly chart, guys. This reminds me exactly of XOP. You guys see this big forever downtrend, and then we get a very nice reversal off the lows. We break this downtrend and then start making higher lows and higher highs, right? Look at MO. Compare those charts. They're like very, very similar, right? We get this breakout of this downtrend that's been going forever, and then what do? We push up into the weekly 200, and you get this really big cup forming, right? And honestly, it's just about to break out. I'm going to set an alert up here. I'm hoping I'm not seeing this just too late because, from the daily chart, I need this to pull back so I can get in. I need 50-50, which is the 20-day. That's the level I want to buy this at. But I really, really like this this chart for a possible swing. Now, the day trade idea is 50-50. It's pretty cut and dry. It's real simple to see why. The swing idea on it, I would, on this one, I'm going to wait for it to trigger. Okay, so I need it to break over 52.59, and then I'm looking to buy dips back into the weekly 50. And the stop's going to go under here, under this 42.50 level. So let's try to just throw this on here real quick so you guys can see. Let's say it triggers, and then I'm trying to buy it here. Stop goes down here, and the target on this one is going to be probably up into these highs here. Honestly, if this thing really wanted to curl and get going, there's no reason why it couldn't start a longer term secular bull trend or long uptrend on this equity and be destined to go back up here into the 77s. So this is the kind of trade where it's going to develop and unfold over a long period of time. It lends itself very well to buying the dip on dips as long as the trend is paying you. So that would be kind of the basic idea, the swing idea on MO. So that's it for the strong stocks looking for continuation. I'm going to jump into FinVis, guys, and we're going to go look at the screener for oversold reversion setups. So here's the screener. You guys should know this one by now. The only thing that's got a RSI of 20 or lower is MMM, and I'm not really enthusiastic at all about getting involved in MMM. Yes, it's really, really sold off. I might entertain it somewhere around, if it really sells off 143s, I might scoop some and keep a tight risk on this name. But it's just the only reason I would touch this on the long side is for that dead cat bounce. It's got a 4-point range. It trades 5 million shares. Well, let's see what the average volume is. Average volume on this name is just under 4 million shares a day. So it's liquid enough. It has the range. I know, I don't know how low this thing could go. It's got a lot of negative headlines surrounding it, but there's no reason at all why you couldn't bounce this for 2, 3, 4 points in a span of 30 minutes and be in, out, done, and on your way. So like if I trade MMM, that's the only way I'm doing it. Possible emotional flush in the 143.39. You got your quarterly pivot down there. If that were to fail, I may revisit it at the annual pivot, which is closer to 137. And so once when you only have one stock that's got that low of an RSI, when we start bumping up into the the next level of RSI higher, these are a lot less attractive. Like Facebook, you'll remember Facebook from the other week, we wanted 305 or 205. We're there now. But the thing is it's just grinded down. I really think Facebook might have a capitulation in it. We might be seeing 195, 185, who knows? This grindy action lower is just collecting longs that are like, it's on sale, buy the dip, and then add till what happens? Till margin call and flush. So that's what most of the rest of the names kind of look like to me. I'm not really super interested. Oracle, I kind of like Oracle. This is, coming into a pretty interesting spot. You got the monthly 20, and, we are, if you look at the weekly, really, really sold off from the weekly 20. It's just been straight down ever since that failed breakout up there. And again, this is another one where it's liquid and has range, right? $2 range. What's the average volume on this one? Is 7 million. So it's liquid. A flush down to maybe the monthly's at 72. Range is 2, close to 74. Yeah, I could see a 72 flush getting me interested on Monday morning. If it hits the scanner, and if you guys don't understand the scanner, over at True Trader, we have scanners that pick up these emotional moves. So I don't have to always set alerts. If Oracle flushes a few points off the open, I'm going to see it on my scanner first thing Monday morning, and I just know, oh, that was in Sunday prep. It's definitely on my list of things I wanted to bounce. I know the level. 72 would be where I get interested. So, you know, slim pickings, guys, as far as the oversold reversion stuff, especially when you think about the fact that every pop is supposed to be looked at as a lower high, right, in the broader market. So I think we get pops, and I think some of these oversold names get those dead cat bounces. There's just not a ton of them that are extremely enticing. So I'm gonna keep it to just that for that section. The next section is the short setups. We're about to look at the weak stocks looking for continuation, and the first name on that list is Dash. These guys had a huge gap up on their earnings numbers and just got smoked, and they got smoked again the very next day. I am looking at the intraday chart. 101.92 is what I'm looking at, and let's see, was it the 5 minute I was using? Yeah, if you look and just draw a line straight across right here, you see where these highs were all at. All these highs. Boom. Whoops. Get rid of that. That's what I'm looking at. A spike back up into 101.92. There's going to be a new weekly pivot in that area. The 20-day is going to be close to there, and you got just this clear-cut level that has been resistance, got above it for a little bit, resistance. Earnings took it above it, but when it came back, it held, and when we lost it, it hasn't got back there. So 101.92 is what I have written down on Dash, guys. DKNG is the next one, and I am looking for 1840 on the name. So this one got beat on earnings, and just looking at this chart here, can see you got your quarterly pivot, and it also already acted as resistance, right? And you can just see this pivot was pre-market support, came under it, lost it, tested it, came down. So opening spike Monday morning, emotional pop up into 1840. I'm looking to fade DKNG. Next name on the list is GM, General Motors, and let's see here, what do I have written down? 50. Yep, 50 is going to be the 20-day. It's also I can just look in here, just see all these areas where it got tested, right? Remember, these levels aren't etched in stone, right? It doesn't have to be 50 exactly, but a spike up into that level, that's where I'm expecting the resistance to show up. It's a psychological level. It's got price history. Next week, come tomorrow, the weekly pivot is actually going to be at 50.14. So it's all right up in that area. Big spike right off the open. What's the ATR as well? I think it's $2. Yeah, so ATR puts us right up into there as well. Next name on this list is KKR. 62s I'm looking for. Just a retest of these recent highs where it rejected, okay? And Friday's candle makes me think we might get that test. You know, it just looks like a bit of a reversal candle after this big sell-off. So I'm looking for a big pop right up in the 62 to get short on KKR. And the last name on this list, I really hesitated with putting this on. Square. This name just looks like such a broken chart. Why was I hesitant to put this on the list? I'll tell you. It's really hard to want to short something that's this extended on the weekly. You see how far we are from the weekly 20 and right into these key levels. So the only thing that's keeping me having this on the list is the weekly chart's got these big wicks to the upside. Every time it makes a push on the weekly, you know, it ends up closing, giving all of it back, and then we breach this level. So for that reason, I'll keep it on the list. The thing about it is I highly doubt we even get what I want. The level I wrote down is 116, right? So we're trading at 97.72 was the close on Friday. It's most likely, if we get that level, it's not till Tuesday or Wednesday, right? I don't see this going 116 Monday. But if we get back up into 116s, like this level, just look at how these recent highs all just kept getting stuffed up there, right? And look at that. NQ just triggered the rut row level, and ES just came into that support. So what I'm guessing is that means ES is probably about to lose its level as well. Let's go to ES real quick. You can see, no, ES's rut row level is pretty far away still, actually. But you can see we are getting some price action here that's getting pretty interesting. And we can go to NASDAQ real quick too and check that out. It's funny to see that happen live, eh? I didn't expect that. Where's my main? There it is. Yeah, so yeah, we definitely broke that level convincingly so far, right? So remember what I said, guys. We can take that level out. I don't think we just sell straight off into an abyss. In fact, I think now I'm really, really looking to short pops back in the levels of resistance because, you know, we are confirming a lower high on the weekly chart here. Look, you know, push up, lower high, lower low. Push up, lower high, lower low. Trend is down. The trend is your friend. Path of least resistance, guys. Yeah, so real quick, go back to square. I was just pointing out 116 is where I'm looking for to get short square if it comes emotionally. Now, I know you guys, one of the suggestions you guys make is that I review trades from the prior week that were from the Sunday prep. Last week, if you go look at the prep, most of the names came really close to the levels I wanted, but they didn't get there. The few that did get to the levels I wanted, they did not get there in the way I needed. So there wasn't a single trade I took from the Sunday prep last week. So there's really nothing I can go and review about that. If that changes next week, Sunday prep, I will go over it. But understand, guys, the reason I wanted to say that is to point out that just because I give you these levels, the levels themselves are nothing. It's how the stock gets there. Okay, so when I say square 116, okay, if square just drifts up into 116, I'm not shorting it. It must happen emotionally. It must happen. It's all about the speed of the move into those levels for me. And that's the way I trade. It doesn't mean you have to do it that way, but that's the system that I trade, that I have backtested, that I have defined. And I'm only able to trade the way I know and talk about stocks the way I see them. So if you guys trade a different way, then that's great. But make your own plans of how you would trade it at those levels. Okay, and then so the last section, guys, is overbought reversion setups. And remember, to change this oversold reversion, all we do is change the RSI, right? So nothing at 90. Is there anything at 80? Only thing is Philip Morris, guys. And Philip Morris, I believe I have an alert set from a while back still. Yeah, so 115s is where I want Philip Morris. We're not there. In fact, you know, it's kind of slowed down, right? This big move up, this is kind of just a little flag up here. It doesn't look like it on the daily, but if you look here, here's an hourly chart. You just have a bit of a flag up here. I don't want these little consolidations. I want a rip, an emotional rip up into those levels. Could this roll over and go back to the 20 days? Sure. It did right here, right? But should it? I don't know. Could it? Yes. Should it? I don't know. The only time I put money at risk is when I can say something should happen, not just because it could. And that's a big difference between people that trade with an edge and people that just trade to gamble. So that was it for the list, guys. Not a lot of ideas, but I was trying to focus more about the thought process and the concept of how I come up with my broader market analysis and looking at the sectors. Let me check out the comments real quick and see if there's anything that needs to be answered. Yeah, I don't see too many questions, guys. Let me see. Yeah, not seeing any questions. So if there's no questions, I'm just gonna call it here. Yeah, you know, like I said, honestly, guys, it's not really about the trade ideas. It's much more about the thought process of creating a trade plan and looking top-down analysis, right? Start at the broader market, start at a monthly chart, and then work your way in. Start at the sectors, find the strong sectors, see where the money's rotating, and then create your game plan. That's why all my long ideas are straight out consumer staples, right? Now, here's another thing real quick, point out, is consumer staples, if you go look at them, there's some names in here like Walmart, Walmart's not on my list. Why is Walmart not on my list? Well, just because it's a consumer staple. What else is Walmart? Walmart's a retailer. Do you guys remember what the retail sector looked like? The retail sector looked like trash. Remember? XRT chart. Can look at it real quick. Remember this chart? That's Walmart. Just because something's in one sector doesn't mean it's not in multiple sectors, guys. So there's a reason Coca-Cola and Kraft Heinz and Altria are in the list, but things like Walmart or Target aren't. I don't want the retail names. So that's just one more little thing to point out. Actually got a new question real quick. Javier's asking thoughts on UPS long at 204. Can definitely take a look at it real quick. Let's see. 204.80. No, 204.50 he says. Yeah, definitely a good level. You got your quarterly pivot and the 200-day right there. And it's just one of those names where I'm not going to trade it personally just because it's a little bit thinner of a name. I know it's trading, 2 to 3 million shares a day, but I just know from trading UPS, the further we get away from those earnings numbers, same with FedEx, it really thins up, and it might not really reflect in the volume, but when you look at the spread. So like something like UPS can oftentimes have a 1-point spread, and I'd rather trade something trading much more liquid where the spread tightens up, and that way I don't have to worry about a bunch of slippage. But I like that level on UPS. I honestly though, the thing is after the candle on Friday, it looks like it may already be trying to reverse. You're right off the weekly 20 here, and so it may not get down there. But I see the level you're looking at, and it's a good level. KH chips and China stocks. KH, you always have a million questions about these names. I'm not gonna go through all those names. The chips, they took a beating the other week. But I still think obviously it's really gonna depend on the broader market. But here's Nvidia, guys. And this is what I see when I look at Nvidia. If this low holds, whoops, I can't drag this. Yeah, if this low right here, if we reverse from here, you still have this really nice trigger up here. And if you look at the weekly chart, God. As soon as I pull up the weekly chart, my whole concept changes, or my whole perspective changes. Guys, this is a perfect example of start with the higher time frames. Start with a monthly chart, a weekly chart, then work your way down. What is it about this weekly chart that made me want to throw up in my mouth? Anybody know? Look at the tails on these weekly candles right into the underside of the weekly 20. That makes me not really want to touch this long. Could it change? Yes, of course. But this looks like it's coming lower. It really does with this when you look at the weekly chart. So, yeah. Remember, start with those higher time frames when you look at your analysis, guys. Yeah, exactly, Yogi, those wicks. But yeah, again, this could change, and but it's just one of those things where I think there's sexier charts out there, like this MO chart. I think this is a sexy chart right here, guys. So remember, don't fall in love with a ticker like you have to trade this name. It's something where it's just be that guy that can be fluid like water and just go from sector to sector and trade where the money's going. Trade those sexy charts. Do not get stuck looking at a chart and trying to force yourself to see a setup when there's none there. We have this uncanny ability as humans to see shit we want to see. If you want to see a really ugly chart have a long trigger, your mind will conjure one up. And it's the most dangerous thing about our minds is that we can 100% find something in a chart that confirms our bias. So don't be that person. Learn how to just go spot the sexy charts. Do what I did on Nvidia. Look at a higher time frame and just be objective. The second I saw that weekly chart on Nvidia, nope, no thank you. Okay. All right, guys, that's going to be it for the Sunday prep. I hope you guys actually pay attention to the beginning part. The ideas, like I said, I don't care much about the ideas. I want you guys to just get that thought process going. Respect risk, plan your trades, trade your plans, guys. I'll see you guys in the market tomorrow morning. Head over to truetrader.net. There's a 5-day, $30 trial. I'm telling you, you guys should at least check us out for the 5-day period. If not, signing up. Like, honestly, the monthly prices are ridiculously low to join, and you get access to, I'm there, Goose is there, Adriano's there, Sunil's there. There's so many guys over there that just slay it. Check us out, try us out. See you tomorrow morning. Peace.